Well, welcome to another Workshop Wednesday. Did you like that, Kate? Did you like the little video countdown?
I did. I watched last week's video and I saw it happen. I was like,
so it wasn't a surprise.
Well, why would I miss out on a Workshop Wednesday? Even though I couldn't attend, I still had to watch it.
All right. Well, we're glad you joined us today. We figured out the one technology hurdle to get Kate involved.
Well, and so we already not Kate, it's me. So there we go.
That's right. That's right.
This weird 4-day week is hard to bounce back from. So
yeah.
Just putting that out.
What do you say, Kate? You're condensing 5 days of work into 4 days?
Yeah, into 4 days, and I'm actually going to I'm gonna have a girls trip this week with my mom and my sister. So it's really like 5 days of work into like 3.5 days. So we are moving and grooving, trying to get everything squeezed in between downs. Dan and I were trying to connect before this, and I was like, I got like 15 minutes right here if we want to do that. So it's a busy few days, but good busy.
All right, I am quickly sharing these out to the Facebook pages that we're supposed to go, and because I forgot to do them when I set up the event. Worst case scenario.
Really cool
yeah.
Technology.
So again, thank you for joining us for another Workshop Wednesday brought to you by schoolofbookkeeping.com. We're continuing, of course, our sessions with Payroll fundamentals and QuickBooks Workflows. And today we're going to be continuing with Payroll fundamentals in company contributions. So we'll have a little discussion about that. What are you shaking?
That's a Payroll award. I just had to.
Oh, your little Superman Fortress of Solitude with all that crystal behind you.
You can get. One time they had this thing it was literally a point, and I was a little nervous about that.
Gonna stab somebody on the flight home.
Bob is giving us a wave.
Yes.
Yes.
All right. So. And I can actually see him in the chat. Like if I did this little chat overlay, well, new comments would show up here. So Bob would have to wave again in order for it to show up.
Wave again, Bob. He's probably not even listening to us.
Right?
Yeah.
So
I caught you.
So I said, "Hey, Bob." So and it should show up. There it is. He waved again.
All right.
See,
so
it does work.
School of Bookkeeping's Facebook page, right?
That's right.
Awesome.
Yes.
Good
so
job.
This is all how we're trying to get this working. So we are continuing with Payroll fundamentals, which is
everyone's favorite topic. I know it's Kate.
Right.
And actually,
Kate?
It's mine too. See,
I don't have an award, Carrie, so it must be your favorite topic.
It's my favorite topic today.
And then we'll talk a little bit about the announcement that Intuit is making about raising the prices of QuickBooks Online again, which we had this conversation last year. So we want to talk a little bit again.
Thing, maybe. Hey, Anna.
So, yes, Carrie is amused by new technology.
It doesn't take much.
It's cool because you can see exactly which platform they're on. This is pretty neat.
This is neat.
Yeah. Cool. So and we're trying to move away from Zoom to be able to do this sort of thing, so we can have these events a little easier. So she's watching on YouTube. There we go.
YouTube, because why is it? Oh, our YouTube channel with School of Bookkeeping.
That's right.
Good to know. Bob, are you doing the same thing?
I don't know. we'll find out in about 30 seconds when he replies. So there is a little bit of a delay. So just bear that in mind. So if we, okay, so company contributions is a payroll item type that we want to talk to you about. Is now, Kate, from the ADP perspective, do you have the do you have that like delineation of like deductions, additions, payroll contributions? I'm just coming at it from a QuickBooks standpoint, where that's what they would classify it as. Does a ADP have that sort of same thing?
Yep. So it's all under like one spot, but then on there it breaks it down to like the deductions, expense, like everything is broken down under like different sections. But to go to access it, it's all under like one tab, and you set it up as like company level first for all the employees.
So Carrie, what is, what would, if somebody says, well, what's a company contribution? What would you
example?
Not what type, what would you say is the definition of a company contribution, and how it differs from the things that we had talked before about compensation and additions, deductions, those types of things?
So company contributions on the easiest level is like for FICA, for example. When we get our, we're running payroll, we have FICA coming out. Part of it is the company side, the company match. That would be a contribution. Now that wouldn't really show up on your W-2, but like when you run payroll through whatever platform, whether it's ADP or what have you, QuickBooks, you have, that has to be reported somewhere. It's an expense. It's going to end up on your P&L, and it's coming out of your money. Your cash.
So just for the luxury of an employer having an employees, they get
so they have to pay your FICA tax, the FICA Medicare match, and then they have to pay.
But isn't that deducted? Like, isn't the FICA deducted from the employee's paycheck?
Yes, the employee. So there's two pieces. There's the employee and the company match, which is match. So you get 7.65 yanked out of your check, and then 7.65 is paid by the company and matched.
So in addition to paying you wages, they get to pay an additional 7.65 for the company contribution. And what other types of things would be considered to be a company contribution? So in general, then it's now something that the company has to pay on behalf of the employee, that isn't a wage.
So that, and another one is SUTA, which does not affect the employee, but it's, whatever percent that your state requires for whatever, up to whatever amount, they have to pay that in. And so when you're running payroll, that will come out of the checkbook, ready to be paid quarterly, depending on the rules of the state. So that's a one-sided contribution. There's nothing the employee does, but there's more.
And since we are doing fundamentals, SUTA is what?
SUTA is state unemployment tax. And then there is, the state is never alone. There's also federal unemployment tax, and the acronym for that is UTA. So those are two that the company is on the hook for, and the employee is not. It's just something paid into a fund so that in the event that somebody leaves and they need to collect unemployment insurance, it's a way that those agencies can cover those funds. It's not like, even though they send in a certain amount for, say, me, it doesn't mean I turn around and get all that money back. That's a whole nother, it's just a fund. It's a fund for those people that need it. But there's more. That's just the tax side.
Yeah, so that's the legal, right? I mean, it's for having or being in compliance. Yeah,
being the boss.
Being payroll compliance. If you have employees, you need to do those, and they will be considered to be company contributions for each paycheck. Kate, what are some of the other more voluntary options for company contributions?
Do you want to jump in for this, Carrie? You want me to?
Fine, I've got the answer, Dan. So we have 401k, and ADP can manage that for you. So when you, because I'm testing it out. So you have the amount that the employee wants to contribute pre-tax.
Mhm.
And then if the company has a match plan, boom, company contribution.
Yep. Yes, there's the 401k, there's like simple IRAs, so any type of retirement service plan. 401ks don't always have to have a contribution match. So that there might not be something there, but as far as like a simple IRA, it's either going to be 1, 2, or 3% the company's responsible for. So there always will be some sort of company contribution with that. And then other voluntary
Health
things.
insurance is another doozy.
Yep. Health insurance, vision, all that fun stuff. Everything that you want to keep your employees around, you want to keep good talent around, top talent. Those are going to probably be things that fall under company contribution, because the things that you want to contribute to your employees, this way they stay on board with the company.
Right.
So really, it involves mostly around benefits. Then
Yeah.
Is as far as your benefits package that you offer to your employees. I'm trying to think of it.
Benefits the employer is responsible for. Because if it was a deduction, it would be what the employee was responsible for. But as far as company contribution, it's the benefits that their employer is responsible for as the business owner.
And that will come out when you run your payroll. That gets yanked out, and then when you enter in your general ledger entry, whether automatic or manual, or run through the integrated QuickBooks, it would go ahead and record that as the company expense.
Mm-hmm.
And then if it needs to show up on the W-2, there's places that they tell it to.
Right. Now, I think part of the biggest challenge that a lot of people have when they're talking about the accounting of payroll is when you have a paycheck that has all of these things: the compensation, the additions, the deductions, and the company contributions all in one paycheck. And then they try to split out the debits and credits of all that.
Mm-hmm.
That's where things get pretty challenging. And just taking the FICA issue, right? And that is, you pay somebody, $1,000, they're going to have, with nothing else, just in the Social Security and Medicare, they're going to have 7.65, right? 7.65% deducted from their paycheck, which goes into a liability account, not anywhere else, because ultimately that's going to need to be paid to the taxing authority. But then your company contribution also goes to that same liability account, or potentially a separate one if you don't want to manage it in the same account, but another liability account. But then the other side of that is an expense. So you have, as far as the debits and credits is concerned, you have the gross wages of $1,000, and then you have the FICA being deducted, which is offsetting to a liability account. And then you have your company contribution, which has an in and out on the same thing, because there is no, it's not reducing their wages, but it has to be accounted for.
It's got to be expensed on the P&L, and then sitting in that liability account to be paid out. So when it's all said and done at the end of the day, the payroll will pull the funds out of your bank and relieve those liabilities. It's a lot of accounting, and it's so nice to have it done for you.
And that's why, when you're using something like QuickBooks to do that, when you set up those items, it points to the proper accounts. If you're using ADP to run it, you can then map those accounts specifically so that it does synchronize.
Yep.
So go ahead. Were you going to say something, Kate? Or
no, I was just agreeing with you.
All right.
We at ADP, we get what we're good at, and if we're not good at it, we try to partner.
Yeah, exactly. So, last year, we'll put a pin on company contributions. So last year we talked about an increase in QuickBooks Online pricing, and we're having the same conversation this year. Because actually, and I don't fault Intuit for doing this, because every once in a while you do need to raise your prices, and Intuit was its own worst enemy, where it was not raising its prices once a year, based on increased costs and things of that nature. So they're actually listening to themselves, because they're I think they do a survey every year about the accounting pricing survey, and they find out that whether accountants are raising their prices or not
For services.
for services. And the suggestion that they make on those surveys is you should raise your prices every year. So here they are taking their own advice and raising their prices for accounting software once this year. So I wanted to talk a little bit about that. I have the Firm of the Future article up here, and I should be sharing. You should see it. Oh, look at that. I can see that it's being seen. And that's pretty cool. It just reorganized everything.
Well, it's kind of small, or unless that's something I can do.
Well, it's just how we're seeing it
all right.
Here, but I can zoom in the web page.
Oh, nice. Okay.
That. So this is
you got
Firm of the Future. What's that?
Get rid of
it. Yeah, every time it always asks who I am. So there is some pricing changes coming to QuickBooks Online. They're not changing self-employed, but big deal. Nobody uses it.
Really, if they're using it, they should end up starting over. Okay.
So the base charge, the base fee is going up basically $5 a month for Simple Start, Essentials, and Plus. Advanced is going up $20. Yeah,
per month. That's the monthly.
That's the monthly. And then the annual is going up proportionately as well, but not by that same amount. I mean, it's however they figure the annual cost is, but those are also going up as well. So the big question is when does that happen? So July 1st, so in a month, for existing Simple Start and Essential customers who directly pay for their subscription. So those folks will see an increase starting July.
Their notice. Okay.
Right. And then in the middle of July, any new subscription upgrades or downgrades. So if you upgrade or downgrade, it's going to be based on this new pricing structure. Any discounts that you might be having would be based off of that. So we'll get to that in a second. So a month after new customers for Simple Start and Essentials, we get the new pricing for Plus and Advanced. So this is only affecting those folks that are paying directly. So these are just new subscriptions.
Through the direct channel or just direct pay?
Exactly. So they're directly paying, and they're notifying customers that are affected July 1st for those folks.
30-day notice.
So, right. And then September 1st for subscriptions enrolled before July 18th.
And what is this July 18th thing, Dan? What is that? That's got to mean something.
Like why July 18th?
Is it some special holiday or, well, it wouldn't be a holiday because
it's probably, let's look at the calendar.
Is it literally 2 weeks before their fiscal year begins August 1st?
Go away. Mm-hmm. Let's see here. Month. Let me look at months.
You're in June.
July 18th. Yeah, it's exactly. It's 2 weeks before August 1st.
Okay.
Which is their fiscal year start for Intuit. Okay. So mystery solved.
It's some kind of a 2 week lag. I don't understand their accounting, but okay, so that makes sense. So July 18th on, all new people are into the new pricing, the new MSRP.
Right. Exactly. So anything new done before then will be in the new pricing. But if they're existing Plus or Advanced, then that's August 1st. September 1st is for subscriptions that were enrolled before that July 18th cutoff date through the Pro Advisor preferred pricing or legacy accounts that still have wholesale discounts. That's a mouthful. So if they purchased through the Pro Advisor preferred pricing program, a lot of P's in there. which is basically firm build. So if you are paying for your client's ProAdvisor, if you're paying for your client's QBO subscription, and it was done before July 18th, September 1st is when you will see the price increase. That doesn't mean you're going to get billed on September 1st. That means that your prices, the base price, will go up, so that the next time that you get billed, it will be reflective of the new base price. Your discount will be whatever your discount is, whether that's a 30% or the 50% for the legacy wholesale counts, will be based off of that base. I didn't want to say it twice.
Speaking of legacy, let me interrupt here. Is there any idea of when the legacy, have they mentioned when the legacy is going to end and it'll be in par with everything else?
No, I have not heard anything.
Right.
And if I did, I would probably be,
Yeah, you're no, I just didn't know
dart
if
in the back of my
if it was privy to share. Just when I see the word legacy, I know one day that will, for us to prepare.
I'm fully expecting that to go away, or at least be on par with what the ProAdvisor preferred pricing is for firm build at 30%. The question is when. So, I mean, I would be
one day just plan for it.
Yeah, and I think that's one of the comments that what I wrote to you is I don't, I don't try to second guess what Intuit is going to do, because I would just be spending so much energy trying to figure it out, or play chess with the changes that they're making, and then they
do something else,
come out of left field anyway, and then do something different. So we do have to kind of respond or react to when we see this kind of news. I think the biggest takeaway or the biggest challenge with wholesale was when it first started some 9 years ago. It was positioned as, okay, you manage the billing, and then you recoup your fees however you want through value based pricing. And it got a lot of accountants to opt into that, to be able to, okay, I'll just manage the billing for the subscription, and then I'll work with my client, to get, to recoup those fees through my services, rather than saying, well, I charge you $65 an hour or whatever, get off of the hourly bill, billing by the hour model, and go into, some kind of value-based pricing model
that includes
which a lot of
subscription.
Yeah, and they're the costs of doing the technology costs are just part of that, and then you can base your prices based on that. So if you are doing that, and you're doing that, and then you have now your costs are going up, right? So that means that not just your costs are going up. Now you have to have that conversation with your clients that you're also raising your prices because of raising costs. So this is kind of a lesson in supply chain with technology, right? Right? Because as costs go up for the state of the world, the way things are, we're seeing that all across the board. With different prices increasing, and it's just one of the other things that is being impacted by the state of the world. So there's a lot of other frequently asked questions when they go into effect. Oh, here's the one.
Oh, the
about the annual. They put it in there.
There it is. We needed that.
Yeah, so you would see what the advance would go up to, and the plus. So for clients who are
direct pay,
who are in direct pay, it wouldn't be a bad idea to have them switch to annual billing before the price goes.
Or if they're going, well, I was going to say, what about new customers? I would recommend that they do, before July 18th, do the annual subscription, go as high as you can because you're getting a discount, and do the annual subscription so you lock into the lower rate at the better discount. And then after your year and that discount rolls off, then you can, say, hey, Advance is a great fit, or I'm okay on Plus.
Mhm.
Yeah.
So that's what we recommend. Lean in on the higher price stuff at the good discount. Don't go upside down. Don't start with the cheapest thing and then realize that the upgrade is going to be full price when you realize you're missing features. Start out with all the features and tools to help you set up your customer with lots of help.
So you have about 6 weeks, to
do this.
formalize that to your clients, to switch, because you can go into the billing and subscription, switch to annual, or maybe you need to call, to do that. But then it's going to bill at the current rate before it goes up.
Yeah,
and that's going to be
in.
that.
Might as well.
Be that if they're going to be on for a year, right? But I mean, if they're a volatile company and their chances of they're going going under in 2 months, well, then that's a sunk cost to do that.
Yeah. Yep.
And then there's a question: if I have a promotional pricing, if you have promotion pricing for Essentials Plus or Advanced, your price is unaffected until the time your promotion is expired. So if you are in a discount window, your price won't go up until it expires, and then it'll be the new price.
Oh, but MSRP, the discount, if you're 30% off, that's the promo they're talking about. But the MSRP will go up. So, right.
Yeah, it says your price. So this is the way I'm reading it. Your price is unaffected until the time that your promotion expires. So price is the base price.
But what they don't say is what we know from actual customers is when in that first year of the promo, just be aware that when you change flavors, you take a chance of losing that discount. That's why we keep saying, don't start cheap, start high and go low.
And especially if you do that after July 18th, you are in now I'm in the new subscription window pricing. So I'm making any changes, all bets are essentially off because you're making a change to your billing prior to the expiration of the promotion.
Yes.
That does not include Pro-Advisor preferred pricing. Firm billed Pro-Advisor preferred pricing is not a promotion. It is a 30% discount. So,
for now, until that.
I know that's going to be a question. I'm like, well, I'm giving a discount by using the firm bill. It's like, well, no, that's not a promo. That is a.
So that's the updated terminology. The PPPPPP replaces the WB, wholesale billing. That terminology is legacy, and the Pro-Advisor preferred pricing is the constant life. Well, we're not allowed to use the word lifetime 30% off because then that gives Intuit the right to say, oh, we're done with that. So
that was a confusion when wholesale first came out, right? The price at that point, the base price for Plus, there was no Advanced, was $39.95. So they got 50% off of that, so made it $19.95
for years and years,
right? And then they started upping the base price, and then people were wondering why it's not $19.95 anymore. And the verbiage of the wholesale discount is it's a discount off of the base price, right? So if they change the base price, then you still get 50%, or in this case now it's 30%, but it's based off of that new base price as prices increase. So it's not a guaranteed end price; it's a guaranteed discount, and that's the distinction that we
always subject to change, because now these are feeling annual. So just, you got to be prepared. Right.
And I think in some cases it's causing people to rethink the strategy, right? Like, okay, well now it's not really giving me enough margin, to recoup this cost, because now my discount has gone from 50% to now 30%. So that's a 20% increase, or whatever the math is.
40% 40%
increase from your cost. And now the price is increasing again. So I think a lot of people are taking this as an opportunity to say, I don't want to do this firm build stuff anymore. It's a little too much of a headache. You now cross over into potential sales tax compliance issues when you know how that's all working. It's all up to your state, to determine that sort of thing. So there's a lot more headaches for a 30% discount that either you're passing on to your client and recouping, directly, or you're including that as part of your fees, which is now your cost.
And so there's a couple things that you need to keep in mind that you're doing, that, like Dan mentioned, if you have to pay sales tax, but if you're collecting credit card, you've got those fees and your administrative fees to make sure your customer's paying, their bills. So you need to make sure you have enough buffer to cover this if you're going to continue in the formerly known as WB billing to the PPPP billing, or you can, there's other options.
Yeah. So that's kind of the basic gist about the
QBO
price changes of QBO. There is also a slight increase in payroll, so that's listed here. I did put in the Firm of the Future article, so you can check it out. Hopefully that posted in YouTube and Facebook.
Oh, well, I see it here in our
you see it here. So. But the employee fee is going from $4, and this is just the QuickBooks Online Payroll for Core, is going from $4 to $5. If you're on Premium or Elite, those prices are unaffected. This is only the per employee fee per month for Core. I did notice here that this contractor, so if you pay your contractors through QBO Payroll, it was subject to the employee fee of $4, but it looks like the monthly fee is changing from $4 per contractor for a total of $15 per month for up to 20 contractors. So that's actually a lower cost than the $4 per contract, because that would be five contractors for the $20.
Oh yeah. No. There you go. That's
that's actually
a win.
A price discount. There's a put on the take.
No, not a take.
All right. So instead of it being $4, it's now $15 for up to 20, and then $2 for each additional contract.
Okay.
So if you are using using the payroll service to direct deposit to your contractors, that fee is actually going down. So that's
do any of those versions of payroll process your 1099s?
They do. Yeah, all
of them,
QBO,
even Core?
Even Core.
Okay. All right. Good to know.
But don't worry, Kate, she's not switching.
No.
She likes her ADP.
Just asking.
And then for those curious, they will go into effect on the same date structure as the QBO payroll.
Oh, and then some nonsense about enroll before March 1st. So that's fun.
Oh, yeah. So let's see. Subscription for enroll before. Oh, okay. So there's a window. I'm wondering if they signed up on April 1st.
What happens? They're locked in.
But to put it
through, no.
Like
you will have to.
Do you remember?
Somebody tell me.
That
report back.
Right. We'll figure that out. This reminds me of the Price is Right Plinko, where like you drop the little thing, and it's like, where is the price going to end up? Mm-hmm. Hopefully
here.
It's not.
No, here. Yes, here. And then sometimes
$1 million.
What did you call you said somebody was reporting that their price didn't go up. So we actually called out that, well, that's a gift to you. If the price that they say was going up and it didn't, meaning their back end billing didn't kick in right, you get a win. So nothing wrong with a little win.
All right. So yeah, Anna asked the question. So what happens if they signed up on March 2nd? When does their price go?
Plinko, Anna. Price is right.
You are going to ask and find out, and then we'll put that in the comments here.
Yes.
All right. Anything else that we want to talk about with?
So note the pricing for the other two, the Elite and Premium, Premier, Premium, whatever the P word is, payroll stayed the same from last year. No changes.
Right.
Okay.
And there's some other things.
We also had a lot of people that, just like signing up for Simple Start and Core Payroll, I don't think they realized how much they're cutting themselves short, because we found out that people that want QB time, they have to be in one of the other programs. Core does not.
Yeah.
So you have to upgrade. And if you start in the wrong product and you turn on an upgrade, you're MSRP. So you didn't do any favors if you advise your client to start low and go high. That sounds like another Price is Right thing, doesn't it?
Exactly.
We're on game shows today. Start high and down. And if you downgrade, run the numbers in front, do a spreadsheet on it and look at it. Because we did that once, Dan. The discount it's much better to apologize when you're going.
Yeah, it's less of a hit when you lose the discount and you're downgrading than if you lose the discount and you're upgrading.
And you have to upgrade when you're in the wrong product because you're not getting the features you need. So don't start cheap.
Right. So, I don't know what to say after that, but
don't start cheap.
That's the tagline. Don't start cheap.
Don't start cheap. Get the right features. Make
sure.
Yeah,
I mean, and that is part of the challenge I think that we face in this industry is a lot of clients advise out of their own wallet, right? And
you mean clients, or you're talking about pro advisors will advise out of their wallets?
Yeah. Accounting professionals advise out of their own wallets. Like, well, this is cheaper, this is free, or this is included, because that's what I would do. But you tend to get what you paid for, as Carrie mentioned. And when we're talking about like Elite Payroll can set it up for you, right? So you can certainly offload setting up payroll, or go to the ADP and have Kate do it. Either one.
Kate and her team.
It's not just all Kate, because obviously she's not doing it right now.
Yeah. So, and having gone through the experience, it's, switching payroll it's a challenge no matter what. So, I mean, when I see people sign up for Core through our partner program, I'm like, that means it's all on them. And if they don't understand payroll, they're setting themselves up. And I understand payroll. They're setting themselves up for
you've got the award to prove it.
I got the award to prove it. And, Premier is Premium or Premier, one of the PREM words. That's one where you do it together, which I don't have a problem with that. But Elite, they do it for you, like, and ADP does it for you. But ultimately, if you're handing Kate garbage and you're giving her the wrong information, she can only put in what you do. So I am human, and I made a mistake on somebody's direct deposit numbers. That was my fault. I didn't look. I had the information, and we worked together, and I quickly skipped over something. And I had to go behind, and work and fix it. It's embarrassing, because if you mess up payroll, especially your employees are looking at you like, okay, it's January so-and-so, where's my check? Mm-hmm. I was like, what do you mean, where's your check? And I went and looked, I had an incomplete number. So, that's why we're doing this course, is because we want you to understand the fundamentals. And we also want to scare you enough to know that you've got to cross your T's, dot your I's, and double check, because even the payroll queen can screw it up.
Even if you've got an award, you can still mess it up.
You get awards for screwing it up. But let me tell you, explain to my employees that you didn't get a check after Christmas is not a nice thing to do. No. And how do you explain that? I screwed up. It wasn't Kate's fault. I could get mad at her all day long. It was on me.
The psychic version of the payroll service is not available yet.
Yeah, right. It's not. It never will be. So
still will do what it's told to do.
Use your tools and use your expertise to help your clients. And if you're clients can be watching our videos too. Make sure you have your most knowledgeable payroll person in charge of this setup.
All right. So we are just chatting away with.
Oh, yeah. That's my favorite topic, Dan.
Why is every topic your favorite topic?
Just
Carrie loves to talk to
I
us.
love payroll. Hey, who doesn't like getting a paycheck? Right?
I love it.
I love it.
All right, so we'll see you next week on another Workshop Wednesday, where we'll continue the conversation of payroll fundamentals and shenanigans added to it.
Yeah, those are always hot topics. Thanks for joining, and we'll see you